makers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London with the conversations that matter. And here's what's coming up on today's program. Decision day at the Bank of England. Will it be 25 or 50 basis point hike? We're live from Threadneedle Street. Now, the Bank of Japan steps in for the second time this week with more unscheduled bond buying to slow the spike in yields. Plus, coming up in our weekly UK show, the future of housing. Will there be a crash or just a correction? But first thing is first, because there's quite a lot going on in the markets. Now, when you look at the European map, they're definitely taking their cue from what's been going on overnight and, of course, what we're seeing in treasuries. You can see the FTSE down some 1.5%, pressure across the board with the CAC 40 down 1.3%. So stocks are definitely deepening their slump across the board, unraveling some of this year's high-powered rally. We have a great, of course, chart looking at that, but really everything stems from treasuries, and treasuries declining is adding to some of that nervousness out there. In the latest earnings news, we also want to show you Infineon. Infineon, I think, down 8% in today's trading session. This is after they really disappointed in terms of forecasts, and that came from the German chip maker. So you can see it was down 8%. It's now down 12%. Overall, of course, the picture is one of the rally that we saw in the stock 600, definitely erasing some of their gains from the start of the year. So if we look longer term at what we've seen European stock 600 do, you can see this is almost from, the start of July. And we were seeing a rally that we saw very much also in some of the European, the other US indices. This is over the last 25 days, and we're seeing now a slump, not only because of earnings, but really because of the rout that we're seeing in treasuries. Now, investors bracing for another interest rate increase also from the Bank of England later today. So we're looking at gilts, US 10-year, where we're seeing quite a lot of movement for 1486. We'll go back and actually look in depth at what that means for treasuries going forward. There's huge issuance also that's coming out in the next 10 days or so. Now, it's decision day for the Bank of England. Economists split on whether we'll get a 25 basis point hike or 50. For the details, let's get straight to Lizzie Burden on Threadneedle Street. So, Lizzie, what are we actually expecting in terms of the decision and the vote split?
Well, as you say, Francine, markets and economists are split on whether we're going to see 25 basis points or a 50 basis point hike from the Bank of England today, up from 5%, the current level. This after the cooler than expected inflation print in June encouraged traders to pare back their bets for where they see rates peaking here in the UK. Now they see 5.75%. You remember we also had that Bloomberg scoop revealing that a majority of the Chancellor's Economic Advisory Panel, some of them former Bank of England policymakers, are worried about the risk of the bank over-tightening. Be interesting to see in the updated forecasts today whether the bank sees a recession on the horizon for the UK economy. So in terms of the vote split, our economists at Bloomberg Economics reckon it's going to be 3-5-1, 3 for 50, 5 for 25 and 1 for a hold. And then in terms of the language around the decision, they reckon it'll be much like the ECB and the Fed, leaving the door open at the next meeting for a hike or a hold, whatever the data warrant. The other potential surprise, though, could be about quantitative tightening. The Deputy Governor, Dave Ramsden, signalled last month that we can expect an announcement in September about an acceleration of the pace of quantitative tightening because it's been going on like clockwork in the background. He wants to retool the arsenal in case of another crisis. But there has been speculation from Capital Economics and BNP Paribas that that announcement could come today because there is precedent for an announcement like that at the August meeting when they've got the opportunity at the press conference. I know you'll be there later, Francine, to explain themselves. But it didn't stop them going for a jumbo hike at the last meeting. So we'll have to see at 12 o'clock the decision from the Bank of England.
Yeah, and we'll see what they'll do, of course, with QT and whether that then gives them more ammunition or something to go around with the economy. Thank you so much. Our UK correspondent there, Lizzie Burden. Now, don't miss our coverage of the Bank of England's policy decision at midday UK time with a press conference 30 minutes later. Now, also, the Bank of Japan announced unscheduled debt purchase operations for a second time this week. So let's get straight to our Valerie Teitel from our markets team. So, Valerie, what are we seeing today?
a second intervention from the BOJ since their yield curve control tweak only last Friday. Now, we're slowly trying to understand the reaction function of the Bank of Japan, what prompts them to actually intervene. 2 times maybe doesn't make a trend, but if we look at what's prompted them the last 2 times, it was just over a 5 basis point rise in the yield. The last time they intervened was on Monday morning. That was right after the tweak. And then if we compare when that intervention was on Monday to where they intervened today, it was just over a 5 basis point rise that prompted them to intervene. Does that kind of trend hold? That will be the question the markets are asking. Now, we have seen some quite bizarre price action when it comes to dollar yen, so I want to talk about it for just a moment. This morning, when the Bank of Japan announced the intervention, we did see a original bout of yen weakening, because that makes sense. If the Bank of Japan doesn't want yields to rise, if it's preventing it from following the global trend, the pressure is released elsewhere. It's released in the FX market. But in only the last 30 minutes, we have seen a bout of strengthening in dollar yen. A lot of eyebrows raised on what triggered this, Francine. Now, remember, we are slightly on intervention watch from the Ministry of Finance. We know the last time they intervened to prevent the yen weakening, it was around the 144, 145 level, and on a 143 handle now, we're not very too far off from that trigger.
Valerie, thanks so much. Valerie Teitel there on the BOJ. Now joining us is Chatham Financial Managing Partner and Head of Chatham Europe, Jackie Bowie, and Bloomberg's Christine Aquino. So thank you both for joining us. Jackie, when you look at BOE and what we're expecting, 25 or 50?
I think most people are firmly in the 25 basis point camp this time round, especially after 50 basis points in June, and since then we've seen some improvement in inflation data and some weakening in the economy. So firmly in 25. Okay,
firmly in 25. This is our big number. I love this. So we're starting to basically find a number, and we're trying to put it into context. And Christine, it's 33%. Basically is our big number today, which means that there are 33 market participants that believe that actually they'll get 50 basis points from the BOE. So I don't know whether it's a communication problem with the BOE or just because data, sure, core inflation has come down a bit, but we're still a bit all over the place.
Yeah, I think that's exactly right, Francine. I mean, that 33% camp, it's not the majority, but it's certainly a sizable minority, right? And could introduce quite a lot of volatility into the decision. And you're absolutely right. I mean, just looking at the level of inflation here, yes, the nominal rate of inflation has come down, but core is still very much sticky. And both are just way above that 2% target for the Bank of England. So quite problematic still for policymakers. But again, we know that the dangers of the UK economy that the UK economy faces if they do in fact continue with jumbo rate hikes, 50 basis points continuously. And that is, of course, the risk that we do get a harder landing for the UK economy further down the road, especially because the cost of living crisis is still very much an issue here.
Yeah, and you could also see, I guess, a situation, Jackie, where you have inflation coming down, core inflation coming down. I mean, it's still very high, but then it kind of picks up towards the winter months. And so I don't know whether, the Bank of England then has a credibility problem if they don't see that coming.
Yeah, and there's always the risk of some external shocks. I was reading yesterday that we think there's another El Nino event coming our way, which obviously impacts food pricing. I think the other part of it is what we've seen in the inflation numbers, which is more concerning for the Bank of England, is in that service sector. So the concern also about wage growth. So as we look at the data that might influence the decision, perhaps for the September meeting and beyond, I think it will absolutely be in that service sector and the wage growth numbers. That's where the risk lies, to your point about inflation perhaps continuing to be materially above that target rate. The other part, which we'll be looking for today, is where the Bank of England's come out in terms of how quickly they think they can get back to the 2% target.
But also QT. I mean, they could. I mean, does it make sense for them to give themselves, a little bit more space by doing QT, maybe even quite aggressively, or announcing it, so that if something were to happen with the economy that doesn't go to plan, then they just have more of a bazooka?
Yeah, and there's been some interesting commentary about that even this morning, because the market is still predicting that interest rates are going to come back down at the end of next year. And I would say that's been the biggest shift in the last few months, where perhaps that peak rate has come down from the higher levels, but there's more of an expectation that interest rates will stay higher for longer. Now, if that's not the case and the economy does slow, the Bank of England will then be cutting rates in the face of quantitative tightening. So they're opposing forces. I mean, they did say they wouldn't say anything till September, but
we'll watch. Christina, and then the problem is that we're seeing huge Treasury moves. So I don't know whether whatever they announced today also has to fly in the face of that.
Yeah, absolutely, Francine. And we know, of course, what's driving the Treasury turmoil still very much reeling from what we're seeing just globally, right, with the Fitch rating cut for the U.S. And so, of course, feeding into the markets in the U.K. as well. So, yeah, quite interesting moves in bond markets generally. I mean, we are seeing that kind of more of a bear steepening trend, higher yields on the long end, which is exactly, I think, what policymakers are kind of worried about, is really those longer-term borrowing costs rising certainly creates a problem for a lot of governments now potentially struggling to pay their debts, not necessarily, you know, running the risk of a default, but definitely struggling with higher borrowing costs for that borrowing that, you know, they've launched a decade ago over low rates.
Christine, thank you so much. We'll be back with Christina Kino and, of course, Chatham Financials and Jackie Bowie as well. We'll have plenty more, of course, on the markets. This is Bloomberg. Welcome back. Still with us, Bloomberg's Christina Kino and Chatham Financial Managing Partner and Head of Chatham Europe, Jackie Bowie. Now, Christine, when you look at, I mean, there's a huge market movement, right? I mean, there's huge market events actually at the moment. How difficult is it to call it bottom?
Very difficult, Francine. I mean, we are already seeing that sentiment hit, right? We're nearly erased the gain for the year for both the SOX 600 Europe and also the FTSE 100, which we're watching closely on the Markets Today blog. And so I think there's definitely this sense of maybe the incredible run that we've seen in equities in the first half of the year. This is finally when it starts to roll over, because you are seeing these risks coming to fore, and they're coming to fore at a time when volumes are incredibly strong. So there's high conviction moves in this decline in equities at the moment.
Jackie, in general, I mean, when you look at, you know, either economics, fundamentals, PMIs, or earnings, what's Europe's sentiment like?
I'd say that it's been pretty positive in spite of everything we've seen, but it does feel that the turn is coming. We've seen some earnings coming out of the construction sector. We've seen some of the data indices starting to show some weakness. So I feel it will be a more difficult fourth quarter in terms of sentiment.
And Christina, overall, what did we learn from earnings? I mean, a lot of them beat, but actually, you know, some of them got slammed.
Yeah, absolutely, Francine. I mean, I think what we've seen is that there's definitely a high bar for companies to impress, especially at this point. We know, of course, that for banks, for instance, that benefit of higher interest rates possibly starting to fade. That's why we've seen these big buybacks for banks to kind of, I guess, sweeten it for investors while the good times last. Also a big theme of buybacks for big oil companies. Again, we know that fade in energy prices very much factoring into their profits right now. So they're kind of adding that as a sugar pill for investors, you know, give them a little something, even if energy prices are down from their peak.
All right, thank you both for joining us. And a terrific roundup of the markets. Christina Kino from Bloomberg and Chatham Financial Managing Partner Jackie Bowie. So I mispronounced both the first and the last name, Jackie. So no one's jealous. Coming up, French utility Veolia reports a first half profit rise on strong demand from Europe to the Americas. Don't miss our exclusive interview with the Chief Executive Officer, Estelle Brachlianoff. That's coming up next, and this is Bloomberg. Welcome back. Now, Veolia said first half profit jumped 20% as the French utility benefited from strong demand in the U.S., Latin America, and Eastern Europe, as well as deeper than expected cost cuts. Well, joining us now is the Chief Executive, Estelle Brachlianoff. Thank you so much for joining us. First of all, you've had a good set of results with first half profit actually jumping some 20%. Was that mainly on cost cuts, or do you think the economy held up better than you thought it would?
You're right, it's a very good set of results and another all-time high for Veolia with plus 14% of revenue and 90% as net income growth. So very happy about that. And this is mainly due, of course, we are going on with our cost cuts, but this is mainly due to the very, very good demand of our services. You know, we are unique positioning in a leader of ecological transformation, meaning we're helping our customer, cities and industries to decarbonize, to depollute, to regenerate resource. And you can imagine in the world we live today, that this demand is, you know, higher and higher every quarter. And this is what we enjoy. Plus, of course, a good track record of delivery, cost cutting, and synergies with the merger with Suez.
So what are you expecting in the second half? When you look at, of course, some of your units tied to manufacturing, industrial waste treatment, plastic and metal recycling, do you think it'll get better or easier given the economic cycle?
I'm very confident for the rest of the year. This is why I've this morning raised our guidance to now target the upper range of our 5 to 7% EBITDA growth for the year. And how is it so? Because we are 85% immune to economic industrial growth in Veolia, thanks to a very geographically spread footprint. Just to give you an idea, we have a $5 billion turnover in the US alone, and 40% of our turnover is outside Europe, and a very good mix as well of activities, wastewater and energy. So very confident for the rest of the year, and if I may say, for the years to come.
So when are you expecting, or what are you expecting to be your main growth drivers actually going forward? Again, given the headwinds that we're seeing, is it really some of these units that will bring you forward, or is there anything new in the pipeline?
So just to give you a few illustration of this, I would say incoming calls for services in water technologies, water treatment technologies, where we are the worldwide leader with a lot of patent and a wonderful portfolio of technologies. We've enjoyed bookings of 2.7 billion in just the first half of the year. This is with industrial customers present in the lithium factories, in gigafactories, in chip manufacturing, as well as mining, for instance. So this is just one example. Another one will be hazardous waste, where again, we're #1 worldwide. And we've enjoyed a wonderful set of results, in particular in the US, in the first half of the year, and I anticipate that to go on.
Estelle, your share price at the moment, despite some of the encouraging results, is down 3%. Do you worry that there are external headwinds that actually, you know, will weigh on Veolia going forward, that you can't control, that will depress your share price?
I guess I tend not to comment on the share price on the day, and to have a look at the share price over the mid-long term. And if you ask me, is Veolia share price undervalued? The answer is yes, obviously, in many ways. You know, we've enjoyed another great set of results, despite, you know, for instance, flat volumes of waste in the first half of the year. So in a way, we are disconnected mainly, 85%, to what the macro is saying. So there is no rationale behind any share price being down today at all. And again, very confident for the rest of the year and for the years to come.
Do you see any opportunities for Veolia to actually benefit from the US Inflation Reduction Act?
The Inflation Reduction Act is a very good example of a potential series of opportunities for Veolia. As I say, we are helping our customer to decarbonize or to regenerate resource, say circular economy, and this is exactly what IRA is supporting. So that's why we've enjoyed a very big growth in the US, and I expect this to go on for the years to come. Already 5 billion in the US, but fast growing for us.
Is there anything that actually the UK could do to attract, you know, more green investment?
I guess the UK has an ability to attract investment, and as you know, the key paramount is stability in terms of the legislation, and this is what can be done to help attracting more investment. But we're already very present in the UK and still investing a lot. So very happy about the business, which has grown quite well in the first half of the year, as much as other countries.
We also spoke to analysts and investors who consider basically the acquisition and the integration of Suez International as a success. What does it mean for what you want to do next? Is there more M&A in the pipeline, or will you have to sell off certain assets before you do anything else?
So you're right, the integration of Suez, which we acquired less than 18 months ago, is already a large success and bearing fruits. Just to give you an idea, 231 million of cost synergies delivered already in the 17 months since day one. So I'm super happy about that. We are well ahead of plan and on target. There is more to come because, of course, we'll deliver the cost synergies. But the revenue synergies is what interests me as well. And we have many opportunities to develop, for instance, treatment of new pollutant in water or wastewater reuse. And if you look at this summer in the world, where there is a lot of discussion about water scarcity and water quality, you can imagine that being the number one leader of those type of activities gives me a lot of confidence that there will be even more to come. And we've announced a lot of good new contracts signed exactly in the first half. So do we need M&A to grow? The answer is no. We are going on with tuck-ins and bolt-on acquisitions.
Estelle Brachlianoff, thank you so much for joining us. That was, of course, the Veolia Chief Executive Officer.